Good day, this is John Mark Gray, and we are going to talk a little about Bitcoin in this market video. So let's get started. When trading Bitcoin, it is essential to approach it with the same strategies that one would in any other futures market. Notably, the same key participants who dominate traditional futures markets are also significant players in the prominent cryptocurrency sector. But don't fall into the trap of thinking you are investing in some noble investment idea that is going to save the world or rewrite financial history. In the end, it represents just another trade of a rather meaningless asset in financial markets. Never fall in love with any investment thesis, as these aren't investments, these are trades. So avoid being the sucker or bag holder in financial markets. Regardless of how great the narrative sounds to your ears, speaks to your heart, or fits with your modern view of the world. Financial markets are no place for naive little idealists, as there are literally psychotic sharks swimming around this bloody ocean who will devour your financial dreams and ruin your life at a moment's notice, and they don't give a damn about any ideology. In truth, their only god is money itself. These sharks worship at the holy altar of greed. Bitcoin became just another religion for the masses at the end of this greed-filled rainbow, and the financial power brokers found lots of ways to make money off the suckers in this naively trusting spiritual ecosystem of market and regulatory fools. Bitcoin is the hustle of all hustles. It carries the magical elixir for what ails you. It solves all your financial woes. It's a miracle of money creation, the digital god of the future. You have always had to come up with a good story to sell to the masses, and the multitude of fictitious narratives surrounding the crypto space will ultimately crush a lot of financial dreams. Furthermore, you can now use your Bitcoin holdings as collateral at large financial institutions, and then you can use these borrowed funds to buy even more Bitcoin, further perpetuating the vicious cycle of nothingness holding this asset up, but pure artificial liquidity, which when the selling begins, causes yet another massive liquidation cycle in the asset class. This is just another financial disaster waiting to play out again in financial markets. The Bitcoin emperor has no clothes on, and everyone is too greedy making money off the grand illusion to give a damn. This type of behavior is why financial markets never learn from past mistakes. Greed is just too powerful of a drug to ever realistically kick the risk habit in financial markets. The inherent strength of Bitcoin as an investment lies in its ability to control the float, which is a critical concept in financial markets. As a fundamental principle of trading, it is advantageous to invest in assets with smaller and more manageable floats. Such assets are easier to influence and frequently exhibit significant price movements, which are indicative of attractive trading opportunities. Effective float management, through strategies such as issuing a limited number of shares and conducting robust buybacks, combined with long-term investors who are reluctant to sell, can substantially enhance the profitability of financial assets. Bitcoin exemplifies many of these characteristics. It has a relatively small and finite float, benefits from various parties engaging in buyback activities that elevate its value, and possesses a cohort of steadfast investors who are disinclined to sell unless there is a significant market downturn. Understanding these financial principles in relation to Bitcoin can be highly beneficial when applied to legitimate assets with tangible underlying value, such as new stocks with small floats and strong growth potential. These assets have the capacity to deliver substantial returns in the financial markets. Returning to our discussion of Bitcoin and the broader realm of cryptocurrencies, it is evident that these digital assets represent a contemporary gold rush. However, many of these speculative ventures are fundamentally flawed, often lacking intrinsic value, and serving primarily as transient trading instruments in the final analysis. In today's financial markets, the rise of artificial intelligence narratives reflects historical speculative trends in technology, reminiscent of the transformative potential of cryptocurrencies and other purportedly essential technological innovations of the future. Much of the AI-related products and services currently being promoted are not easily monetizable. Instead, businesses capitalize on selling aspirational tools and resources, akin to the jeans and shovels sold during the gold rush, ultimately benefiting from the enthusiasm and optimism of gullible market participants. The ultimate irony lies in the fact that Bitcoin is intended to serve as a critique of fiat currency, responding to the absence of genuine underlying value. However, For Bitcoin to gain acceptance in the public domain as a legitimate asset, it requires the infusion of fiat capital as investment fuel. Without this, it risks remaining a marginal endeavor devoid of substantial value, akin to an undiscovered Dutch painter, an obscure blues musician, or a writer easily forgotten by history. Bitcoin represents an ideal opportunity for marketers. However, one must remain cautious of narratives that appear too good to be true. There also exists a more subtle irony surrounding Bitcoin. If enough people perceive it as real, does its authenticity truly matter? In this context, perception shapes reality. A prime illustration of this phenomenon is the concept of God, which has been articulated and marketed into existence. While there may never have been a deity in this universe, does that hold significance for humanity? People often rely on psychological crutches to navigate life, making Bitcoin feel quite at home in this seemingly artificial world. The quest for wealth frequently underpins these deceptive marketing strategies, which are devoid of any tangible value. So an interesting philosophical question here: does value really matter? And finally, the notion that Bitcoin is akin to digital gold is fundamentally flawed. Digital gold already exists in the form of gold futures markets, where the price of physical gold is determined through these electronic trading platforms. Bitcoin's attempt to associate itself with the gold market stems from the fact that gold possesses intrinsic value, as represented by its physical form. The argument suggests that, by extension, cryptocurrencies also hold genuine value. However, this perspective often appears to be a clever ruse, reflecting a sense of desperation among cryptocurrency proponents. In financial markets, it is essential to be mindful of obvious and less obvious motivations and to always follow the money in the end.